Hey, it's Pat Mannix again from Paris Financial, the tax champions. I wanted today to talk to you about our favoured structure for one family growing a small business. This is the piece de resistance, folks. It's called a trading trust. It's got a corporate trustee, and I'll explain this structure and some of the big advantages that it has. So here we go. This is a trading trust. All right. So here's Mum. She's running this business called Living Pets Proprietary Limited. All right, she does operations on pets and tries to keep them alive, and so she's come up with this fantastic name, Living Pets Proprietary Limited. Living Pets Proprietary Limited is the trustee of this trading trust, which is the Smith Family Trust. Now, it's really important to understand how these two interrelate, all right? The first thing you need to understand with the trading trust is that this name here, the Smith Family Trust, is not advertised to the outside world, but the key thing is that it has the ABN, the business number to run the business, as well as the tax file number. So it is the key business and tax structure of the Living Pets business. So the Smith Family Trust has the ABN to run the business, and it has the tax file number, so it deals with all of the tax obligations. Living Pets Proprietary Limited gives this whole structure its legal strength. So it's registered with ASIC, the Australian Securities and Investments Commission, with an ACN, an Australian company number, and it is public knowledge to the outside world, and Mum can get out there with her Living Pets business, advertise it to the outside world, and that is how these two interrelate as one structure. The Smith Family Trust has the ABN and runs all of the tax, lodge BASs, etc. Living Pets Proprietary Limited is on all of the documentation of the business that advertises to the outside world. The key thing is, folks, and I'll ram this home as many times as I can, if you've got a growing small business with one family, you have to run it through a trading trust. Do not run it through a company on its own. All right, you have to have a trading trust. This Living Pets Proprietary Limited, it's known as the trustee company. So a trust on its own cannot run. It needs a company to run it. So Living Pets Proprietary Limited is the power to run this trust. And it means that it also gives the director of Living Pets Proprietary Limited and the whole trust here limited liability. So as long as you're doing all of the right things within your business and you run into really tough times and your business goes under, Living Pets Proprietary Limited with its corporate structure gives legal strength. So like I've said before, Mum is the sole director of Living Pets because she is running the business. So Living Pets Proprietary Limited's got the power to run this trading trust, and this trading trust is absolutely brilliant for a growing small business. So let's have a look at the family structure here underneath the trading trust. So the business is starting to do okay. It's paying Mum a bit of a salary out of the trust to run the business. So she's in there doing all of the operations on the pets, and she's getting a salary which is out of the trading trust. But at the end of the year, when the trading trust needs to declare tax to the government, the Aussie government, it needs to distribute all of its profit down to either individual members, another trust, or a company. So let's try to keep it as simple as we can. So within the trust here, as I said, Mum's getting a salary, but then Mum and Dad have got a couple of kids, young Jim and young Jessica, and they're about 9 or 10 years old, so they're under 18, and they can get about $400 each distributed from that trust. Okay, and there's no tax to pay. So it seems like a pittance, but it's something in the trading trust. So they're distributed a few $100s each. Mum's distributed $20,000 from the trust. She's already getting a decent salary, but we distribute her $20,000. And the old stay-at-home dad, geez, he's a modern fella, this bloke. he's getting distributed 90,000 from the business as a distribution from this trust. So every year, folks, every single year in the last week of June, our families need to make a decision where they're going to distribute the trading profit of the business running under a trading trust. And they do what's called a minute. And the minute says we're going to give $400 each to Jim and Jessica, or roughly. We're going to distribute more to Mum, but she's already getting a salary from the business, and then we're going to distribute a heap to Dad. And that minute and decision in the last week of June really organises the family's tax affairs as optimal as possible. Trading trusts, absolute crackers. Now, Mum's really doing well, doing a heap of operations on these pets, keeping them all alive, keeping them all living. And she's doing so well, there's an excess of profit in this business of $100,000, which she can distribute. So she sets up another company. We call this in the tax industry a bucket company, and we're calling this Smith Corporate Proprietary Limited. So if she distributes more of the profit to Mum or Dad, she starts to pay a lot higher tax. So by distributing the excess of the $100,000 here to Smith Corporate Proprietary Limited, she is going to limit the tax rate of the whole family. And how we deal with that is at the corporate tax rate level. So that is the whole setup of a trading trust. You need to have a trading trust if you've got a growing small business. I've said this before, but the main whole kicker, apart from the income tax distribution, which we've got here, is that if this business is sold in the first 15 years of its operations, Mum's doing the operations, performing the operations of the business, if it's sold within the first 15 years and you're running a business under a trading trust, you pay half the capital gains tax. If you ran a business purely without the trust under a company, so there was no trust, if you were running it straight under a company, you're going to pay double the tax. So please, if you're running a growing small business out there, make sure you run it under a trading trust structure. It is an absolute cracker for one family businesses growing, and there's so many of them out there. So please get the right advice. You need to run it under this structure. It's got income tax flexibility and also capital gains tax flexibility. So many of our clients in the first 15 years of their business, often they'll have a transaction, whether they sell the business, a family member gets ill and they need to get out of the business, but in the first 15 years, quite often something happens. And so this structure here is the way to go. It doesn't cost you a heap more in accounting fees. It's just really, really smart, a little bit complex, but if you don't keep it complex, stupid, you are costing yourself a heap of dough when it comes to paying Australian tax. There you go, folks, a trading trust. If you don't have one, get one for a growing small business. See you soon.